through your super at preservation age. And with that, I mean, as you can see with the diagram here, so yeah, like I said, up to 6 people can be part of that, can be family, can be friends, can be people that you're in business with. We always set up a corporate trustee with a self-managed super fund, provides a lot more protection, and it's a lot better as far as the structure for succession. So you have all your rollovers from your existing super funds go in there. You've got your employer contributions that go in there. And then if you make any personal super contributions, they all go in there as well.
Simon, if you don't mind, if you can go full screen by pressing F5.
Sorry.
Function key F5.
Shift F5.
I think only F5, I believe. Kerry?
Okay.
Only F5, right?
I actually, if you go up to slideshow and then you do present.
I've done that, but
slideshow, go to slideshow.
Maybe it's not showing. Yeah,
click on slideshow. Click on the top slideshow, Simon. Yeah, no. Yeah.
Is that
No. Go to the menu. Go to the menu slideshow after any animations. Just below just below. Down. No. Slow. We have file, home, insert, draw, design, and then right we have slideshow. Go to the slideshow.
Oh yes.
Yeah. Can you see? Can you see full screen?
Sorry, I thought it was on full screen, but maybe it's just not showing the right screen.
Yeah, probably. Yeah, you have to share this correct screen, which is full. Or otherwise, otherwise you can minimize the left-hand section so that we can see the full screen.
Up the top, it actually should say that you can either mirror it or you can actually swap the screens that you're sharing.
Hang on, let me, if I go entire screen. Okay, is that, can you see the entire screen there?
Yeah, you did it, Simon. Congratulations.
Sorry about that.
We can see your first page.
Okay, excellent. So if I just skip to...
Now you can go to the second slide if you want.
Yeah, I'm just... Why is it not? This is how to do it on that one. Oh, okay, looks like it. Yeah, so that's the disclaimer. Yeah, so sorry, this is what I was just covering off before. So yeah, obviously you've got your self-managed super fund there. You've got up to 6 people that you can have within the fund. And obviously you've got rollovers that go from your existing super funds, employer contributions, and also personal super contributions going in there. So typically to set up a self-managed super fund, you need to have at least 200,000. However, that can be combined across up to 6 members. So like I said, you can have family, friends, business partners, etc., all pool their money together to be able to have a self-managed super fund. And in saying that too, you can have segregated accounts within that self-managed super fund as well. So even though you may be pooling your money together to set it up, it doesn't mean all your money is combined in the one trading account per se. So you can have all that separate. So effectively, the way that you trade the markets with your self-managed super fund, so initially you've got the super fund set up, you have a bank account set up within the self-managed super fund. So typically people will use whoever bank that they bank with at the moment. And then that is directly connected to a broker account. So you'd just be the same broker as what you're using at the moment. But that broker account would be in the name of your self-managed super fund, and the two would be linked together. So initially, once your self-managed super fund is set up, the money from your other super funds has been rolled into the bank account. Then once your broker account's set up, then money would go from your bank account to your broker account, which would be very similar to what you're doing at the moment if you're just trading in your personal name or through a trust. And then money can obviously go back and forth between those two accounts. It can't go anywhere else. It can only go from the bank account of your super fund to your broker account, and obviously vice versa. The other thing is too, which we see a lot with clients, they may pay for trading education out of their super fund, and other trading related expenses as well. So that's obviously something else to consider. So, any future education that you're paying through for trading and whatnot could be paid out of your super. So the process is very straightforward. We do an initial online meeting to discuss how a self-managed super fund could work for you. Obviously, you want to, after wanting to move forward, we then set it all up for you. We can sort of go through the process of liaising with the broker that you use at the moment to set up one in your self-managed super fund name, and then obviously help you through that whole process. And then once your broker account has been set up, it's been funded from money from your super, then obviously you can trade the chosen markets that you're currently trading at the moment, or other markets as well. So that's effectively everything I guess I wanted to cover off today. Does anyone have any questions in regards to how it's all set up or what's involved or anything along those lines?
I think so, Simon, the main thing is the cost of administration.
With the setup or the ongoing
Setup and ongoing, yeah.
Yeah, sure. So look, to do the full setup with the corporate trustee and the SMSF deeds that we do with the law firm, the one-off amount of 6,000 plus GST. The way that we structure that, though, for most people is they'll pay that money up front, and then we can reimburse them once the money from their super is into their bank account. So we then invoice to the super fund, and then we just pay them back what they've paid initially. So effectively, it's only that few week period initially that you're out of pocket, and then it's obviously covered by the super fund. With the tax and audit, you're looking at a yearly amount of 2,500 plus GST, and that's also paid for by your super fund. You can always use your own accountant if they look after SMSFs for tax and audit. We do find what we do is quite competitive, though, but entirely up to you what you'd like to do there.
Thanks, Simon.
No worries. Any other questions at all?
Questions to Simon Billis, because it is a fantastic opportunity to learn about SMSF. I know Vicky is doing his share trading, our strategy through SMSF, and I know Mihir is interested, and yeah, most of you would be looking for this, towards this. This is a good way to get started. So any questions to Simon, please?
Yeah,
Sorry.
look, yeah, sorry, go on.
Are you able, like, splitting the superannuation? So if you have like your superannuation with your employer,
Yes,
can you split some of that off? And
100%. Yeah, so look, if you wanted to have two super funds, for example, as long as you're meeting the requirements to have a self-managed super fund, the ATO are quite particular with having sufficient amount in a self-managed super fund. But look, you can definitely have, if you've got whatever amount with an employer super fund. Most employers in this day and age will just let you choose where you want your super paid to, but you can definitely have two. Sorry, go on.
that whole security thing, sometimes, best to have some that you can do with and some that somebody else can look at.
Yeah, look, that's it too. And I should explain further as well. So we we can give financial advice around, setting up different portfolios. We can manage that as well. There's a whole range of different investments that you can have within the self-managed super fund as well. So if it was more so wanting to go within your self-managed super fund, you could have whatever portion of that you want to trade with, just like what you're doing at the moment. You could have a portion that is in other investments that are a different asset class. You could have, like I said, we can set up portfolios and manage that for you as well. It gives you flexibility, or like you said, you can just have different super funds where you've got maybe you're trading what you've got within the self-managed super fund, and then you've got it with an employer super fund if that's a retail or industry fund. But yeah, look, it's definitely a good option for people that are, I guess, fairly confident with their trading. And obviously, that you can outperform what you're going to get through an industry or a retail super fund. It's just a way that you can better control your outcome for retirement.
One more question, Simon. Do they have like any restrictions? Like, if you go to invest in stocks or something like that, like you can select certain type of stocks kind of things when you have a SMSF?
You can. There's pretty much you can invest in what you want as far as when it comes to stocks. You would just what you could do is you could have your broker account that you're doing your trading through MP Financials with, and you could have, if you want to keep it separate, you could have another broker account effectively where you're doing your share investing through. So there's different platforms that we use for investing in different shares, whether they're Australian or international. Or if you want to just do it yourself, you can do cryptocurrencies through self-managed super funds. You can do a whole range of different things.
Okay, thanks.
Just extending on the Dhanuka's question, a specific question: Can anyone do CFD, contract for difference trading in super fund? Simon?
Yeah, definitely. What you want to just check, because there's brokers that I know of that allow for CFD accounts through a self-managed super fund. If there's specific brokers that you use through MP Financials, you would just want to double check that they allow for a self-managed super fund account. Otherwise, there's definitely other ones out there that you can pick. But you can definitely do CFD trading.
Also, I have a question about the minimum requirement fund. So, what if, let's say, can you have like a smaller amount and you open like a self-managed super fund?
Or the only issue, like 200,000 is sort of, look, it could be sort of just below 200,000, but the ATO are very particular with how much you've got within a self-managed super fund. And because every year you have a tax return and an audit done on it, if it's really low, they're just going to pick it up and the ATO will just force it to be closed down. So this is where, we just want to be mindful of what those minimums look like. But like I said, you can always do that as a collective unit. And look at a lot of the high net wealth clients that we deal with. They work together as a family unit or a team to be able to build wealth quicker than what you would as an individual. So it's that collective approach can be quite good.
Just to extend weird question, is there a maximum limit in super fund? Like the minimum you said 200,000, maximum?
Yeah, look, it hasn't sort of come through law at this stage, but they are talking about 3 million per person in super. So, if it's a husband-wife scenario, then you're looking at 6 million, but yeah, look, it's not legislation just yet, but it is definitely something that they've been looking at. But yeah, nothing as such just yet.
And so this is here. So 200K is basically you have to have liquid money in there every year to maintain that, or it can be
No.
any assets as well combined.
No, that's it. So it's more so what you're starting with. You know, for clients of ours that are more property focused, it's not liquid. It's just the asset base
Yep.
that they've got there. But yeah, it's just more so the total value of it all.
Okay.
But you want to have a certain amount liquid, but yeah, just fairly minimal.
If you don't have 200,000, is there any way you're able to use your superannuation to do trading?
Not the way that you would be doing it at the moment, but what you could look at doing is maybe, so initially, if there's friends or siblings or other family members that you could set it up with initially, and just obviously have this planned out and say, okay, well, look, the plan is we're going to work together. We're going to build our super up, but I have the goal of once I've sort of achieved that amount, then I'm going to go set up my own super fund. So it could be more of a part of a longer term plan, knowing that, okay, well, I'm fairly confident with my ability to be able to make money through trading. So look, it might be 3 to 5 years. And then I've got sufficient capital to then set my own up. And then you could either go your separate ways or whatever.
That's really good. Thank you. It's a good thing to have maybe as your plan, as long-term goal as well.
Well, exactly right. And I mean, at the end of the day, super is for your retirement. So you can't access it until you hit preservation age, which for a lot of people is age 60 at a minimum. So yeah, I mean, it's always just taking that long-term approach with it, regardless. But yeah, look, that's definitely an option that I know that people have gone down the path of in the past. And it just sort of helps you get into having a self-managed super fund a lot earlier, especially if you're fairly confident that, you know, you could at least get more than 10% a year, which is probably the best you'll get with most industry and retail funds.
Thank you for that.
Yeah, that's all right. And look, I think the biggest thing is too, for a lot of people, super is one of their largest investments. And, you know, that they may be more limited with access to trading capital outside of super. So being able to effectively replicate what you're doing at the moment through your trading and utilising a portion of your super has definitely been quite popular.
Yeah, Simon, if you did start out with a $200,000 account and then you forego some losses, does the ATO, if you suffered a loss that you went down to 190,000, is it at the end of the financial year will they force closure of the account at that stage, or do they just do it as a progressive thing, or is it at the end of the financial year when they assess it, will they shut you down? Or
yeah, look, they're definitely not going to shut you down with that amount. Look, maybe if it was, I don't know, 80 to 100,000, or, you know, less than 80,000, they're definitely going to want that self-managed super fund wound up. But I mean, if it's, you know, if it just moved down slightly, then that's certainly something different. But I mean, listening to what I've listened to today, I don't think that through the way that you're all trading and learning how to trade, that you would get to a situation where you've you know, you've gone from 200,000 down to say 100,000. But yeah, something minor is not going to be an issue.
Oh, thank you.
What are the tax implications, Simon? Any specific or general?
Yeah, well, look, there are super itself is a very tax effective environment. So, yeah, depending on with the trading side of things, I mean, the most you're going to pay tax wise through your super is at 15%. Capital gains is at 10%. So, yeah, if you're taking more of a long-term approach, where you're buying and holding on to a particular share, then obviously that's going to be a bit less. But if it's constantly trading, yeah, 15% is what you're going to be looking at. So yeah, obviously a lot different than what you do in your personal name.
So what is the tax implication if we hold it for longer term? Let's say like for investment and all that.
Yeah, so your capital gains tax is 10%. So if you buy a parcel of shares and you sell it off, you just be looking at the 10% CGT. So obviously if it's outside of super, then you know, if you've held it for more than 12 months, you've got the 50% discount, but yeah, obviously it's a lot less within the super fund structure.
Thank you.
Yeah, Simon, is that taxed per asset? So if you make one good trade and then make some bad trades, does it balance out, or is it just worked on trade by trade basis?
No, definitely. So with the trading side of things, you're looking at obviously the overall outcome for that financial year. So to answer your question, if you've let's say you have a good trade, but then you've had some other trades that negate those profits, it's just going to balance it out.
Gotcha. Thank you.
That was excellent presentation, Simon. Very helpful, and all the questions are equally answered very well. Any other questions to Simon? We have 1 minute. If not, then thank you very much, Simon, for your time and effort. Thank you, Katie. Thank you, Marty. And thank you, all of you, for an excellent 2 hours discussion. It was amazing. We learned a lot from all of you, especially Marty and Katie and Simon. Thank you, and have a good one till we speak next month on first Sunday, 3 o'clock. Thank you very much. Bye for now.
Thanks,
Thanks,
all.
mate.
Bye.
Thank you, everyone.